Welcome back to the channel. Today I'm going to be talking about a recent blow to the UK stock markets, and I think it's quite an interesting one and really should open the discussion of, is there really any reward to staying in just one market, or should investors look overseas and diversify their investments, not just globally in terms of revenue, but also in terms of exchanges or stock exchanges. And if you like this video and think it delivers more value than usual, then please drop one of these. It's much appreciated. So today's article we've got is headlined, London dealt an 80 billion double blow, chip designer ARM and building materials giant CRH shunned the city for Wall Street listings. London's status as the top financial centre suffered a double blow yesterday as chip designer ARM and building materials giant CRH both set their sights on listings on Wall Street rather than in the city. Now, these are two global companies with a combined valuation of more than £80 billion. Will become the latest to pick America over the UK as the venues for shares to be traded. Losing ARM to New York will be a particularly bitter blow after ministers campaigned for the Cambridge firm, whose chips underpin the global smartphone industry, to list in London. So if you're not following this, ARM has been a business that was acquired by a Japanese company called SoftBank. And basically ARM, as mentioned in the article, is incredibly important as it is in many smartphones, and it is a very revolutionary technology. Therefore, obviously, the ministers and a lot of political debate is about it because it's kind of a pride of the UK kind of thing. Although if it was such a pride of the UK, I'm really surprised that they decided just to sell it off and let it get acquired in the first place. But then again, I think that's a testament to the attitude of, let's say, business owners in the United Kingdom. They don't have that same ambition as overseas where they want to grow it and really become, outrageously rich like the likes of Jeff Bezos, for example. Instead, they're happy to make a couple million and just sell it. I thought that was quite interesting, and perhaps that's one of the cases here why the United States is perhaps more lucrative. Perhaps this is why the businesses are looking overseas and they're deciding that actually we can make more money overseas. And can you really blame them? If you were to list in the the United Kingdom, how are you really going to drive that same kind of impact when everyone is really looking at the big stocks in America? It's no surprise that when you compare one company that's listed in the UK that is in a very similar niche or industry and you compare it to another stock in the United States, the valuations are incredibly different. But that to be said, I once fell for that trap with one of my investments in which it was, or I looked at the United States or the overseas investments and I saw their valuations and thought, wow, they're trading at a real significant premium. That must mean surely these investments on the United Kingdom markets or the London Stock Exchange, that means surely they'll eventually reach that, revert to that mean there of the valuation of the United States. Well, not necessarily, and I actually end up losing quite a lot of money on that investment, and that is my investment with Argo Blockchain, although I would argue that is for different reasons. Anyway, back to the article. This comes after UK-listed Paddy Power owner Flutter said in February that it was considering an additional listing in America, and a report this week that oil giant Shell explored moving to the US before eventually deciding against it. The London Stock Exchange Group boss David Schwimmer, not the actor, said that despite reforms to UK financial rules, there was no silver bullet to reverse the trend. ARM's Japanese owner SoftBank has reportedly chosen to float the company, which is said to be worth £50 billion. Now that is an impressive investment because I'm pretty sure they bought it for about half that, and I think they bought it in around about 2016, somewhere around there. So they look to about double their investment, and of that scale, that is very impressive indeed. It's probably because we sold it at a very low price. Regardless, and this is basically, they've snubbed the idea of a dual listing on both sides of the markets. It said it's not ruled out a potential for a secondary listing in the future for ARM to be in the UK, though it is not likely according to a Bloomberg report. And they've also got Irish-based CRH, which is valued at around about £30 billion, has been listed in London since 2011, but is increasingly focused on America. And this one makes sense because it's a booming business that supplies building materials for major public infrastructure projects such as roads, railways, tunnels and bridges. Now, what they say here is that the US represents 3/4 of its earnings. It's expected to rise to 90% in the coming years, and executives believe an American listing will make it easier to win publicly backed contracts and use stock to acquire smaller companies as it expands. Now, in the case of CRH, That also makes sense, almost for a different reason. It's not like they're trying to reach a higher valuation by being listed in the United States. Instead, they're trying to gain the favor and gain the political favor because a majority of their earnings are obviously domiciled over there. Whereas with ARM, they're looking to, or at least SoftBank is looking to spin off ARM, and they're trying to make as much money as possible from obviously floating this company on the stock market. And that's very much where the likes of the United States is just going to raise more capital. And it's as simple as that. Now, this is a concern for the UK markets because they are trying to make changes. Now, it goes back to the London Stock Exchange Group here, and he said that those are incrementally helpful, but on their own, they're not going to be dramatically transformational. And this is because they've added reforms, which have included allowing dual-class share structures, where some stock owners have a disproportionately higher voting right than others, as well as a cut in the minimum free float requirement for shares. All of this making more accessible and more rewarding for companies to list in the United Kingdom. But it's not doing anything as of yet. Now, interestingly here, I do hold shares of the London Stock Exchange Group, and I will be talking about that a little bit more later. But he mentioned that London was the most attractive international financial capital market. That said, it is also from the CEO of the London Stock Exchange Group, so there may be a slight indication of bias, maybe. But interestingly here, the comments came as the London Stock Exchange Group reported better than expected results. But Schwimmer noted that only 4% of the revenue at the London Stock Exchange Group, which includes a major data and analytics business, were actually represented by the London Stock Exchange itself. Now, this puts it in a very strong position because, sure, okay, the London Stock Exchange itself is not faring too well, but if a majority of their revenue is elsewhere, then perhaps as a business, they've got potential here to really, really change up the London Stock Exchange, because they could go, you know what, look, our competitors, they're doing better than us at the moment. Well, we don't necessarily have to be making as much money on this. Now, shareholders aren't going to immediately like it, but if we know over the longer term that they might, deregulate the markets even further, not at additional risk to you or I, but at the idea that they could get more investment into the markets and perhaps reduced fees, keeping listing fees down, really encouraging this could be a really positive sign going forward and could potentially add some disruption to a space or an industry with very high barriers to entry and very, very old ways of doing things. That said, I do think the London Stock Exchange is certainly trying to modernize here. I do think they are probably an underdog in this race, but it is 1 for 4, right? Because we're discussing this idea, the idea that the UK markets are at a disadvantage. Now, as an investor, do you want to sit there and actually invest your money into a market that, again, has not had very good news whatsoever? You could also argue that, let's say, buy when there's blood in the streets. The UK markets have always been slated following Brexit. They've been struggling since 1997. You see the FTSE 100 is flat in that time. Perhaps now is a buying opportunity, an opportunity where you could make lots of money, as there is a lot of negative sentiment in the UK. But at the same time, is it truly worthwhile taking on that risk, or should you just diversify globally? If you go, okay, look, I've got an exposure to the United Kingdom, I've got some shares there, I've bought some of the best quality businesses that are listed on the London Stock Exchange. Well, actually, I've also invested on companies listed on the Nasdaq, Standard & Poor's 500 index, the S&P 500. There's going to be potential there to find some great quality businesses and certainly at good valuations. Now, you could argue in the UK that it is undervalued, as I was saying. And perhaps it is. Perhaps there is a great bargain to be had here. We might look back in 10 years and go, that was clearly the buy. We should have been buying in 2023, the London Stock Exchange in the market there. Some of these companies are so critically undervalued. Look how much money they've made. But maybe in 10 years' time, we'll also say the opposite. So it's food for thought. Myself, I'm trying to balance my portfolio a little bit more. So I'm actually trying to diversify. Now, I always went with the idea that diversification is protection against ignorance. But in reality, I think it's also just a wise idea, really. Because perhaps I am ignorant in some way, shape or form. Now, you might go, oh, actually, I'm an experienced investor, blah, blah, blah. I've been doing it for 20 years. I know exactly what I'm doing. Maybe you do, maybe you don't. But what makes you so sure in that? And again, for some people, this will pay off very well. They'll get incredibly high returns and they'll do very well for themselves. However, I've not had such a thing, so perhaps as I say, this idea of diversification is a good idea. At the moment, my portfolio is making a very strong recovery. I mean, the portfolio has effectively doubled since October, but when you include deposits, it's not as impressive because I've probably deposited about half of that movement on the way up. That said, it is certainly the biggest upward trend I've seen in the portfolio since first starting. So there's potentially a lot of promise with the value of the portfolio. That said, my investments currently, I think Boohoo is very much undervalued. I think the likes of Games Workshop and London Stock Exchange and Google, they're all trading at more fair valuations, and I'm betting on where I want them or where I believe they'll be in the next 10 years. But I'm trying to keep myself diversified. I'm looking to add another financial company as well to complement my holding in the London Stock Exchange group. And this will be obviously a US listed stock. And I think I'm going to add one or two more stocks here, really balance things out, and therefore have a strategy where I'm not betting on one dog to win the race, but instead I've got 3 or 4 key runners, and I'm betting that one of them, or maybe 2 of them, will at least be in the top 3. And that way, I'm going to be doing well, hopefully, going forward. Now, I hope you enjoyed this video. I'd love to hear your thoughts on regarding the UK stock market and the current position it's in. Do you think they can deregulate it? And do you really think that they're going to be able here to really push on? See, I have optimism, but I always do. Perhaps I'm completely wrong here, and that's why I'm interested to hear your thought. If you haven't already, don't forget to subscribe and smash that like button down below. Have a fantastic day.